So if you're struggling to draw support and resistance zones, maybe you understand essentially the concept of them, like they bounce off certain levels, but you don't exactly know how to draw them, which time frame to look at. This is going to be a very good video for you to pay attention to, because this is exactly how I draw these zones every single day when I'm ready to start the trading day. So the very first thing I like to look at is we have a ticker open right now. This is SPY on the 1 hour chart. So I like to look at the 1 hour chart just to see an overall understanding of what exactly is price doing. Like, where is the trend right now? How is the movement looking like? Where are essentially the bigger peak highs? So this is a high, this is another high, this is another high. And so just looking at that essentially on the overall picture gives me a better understanding of overall trend and where exactly potential support and resistance zones could be. So whenever you look at these higher peaks like this, if we just put the mouse at this level and we look all the way to the left, you can already see in this whole area, you have a reaction here. Looking to the left, you have a reaction right here, and then you have a reaction here. And even from there, you can tell that this is a potential support or resistance area. Now, to get the most precise area, I like to use this process with the weekly chart. So with the weekly chart, I like to see how does price of the previous candles close, and that's going to show me exactly where exactly previous weeks went up to or went down to, and from there I will draw my support and resistance zones. So this week right now is a new candlestick. So I always make sure that wherever price is at in the current week, it could be a Monday, it could be a Thursday, it doesn't really matter what day it is that week. But if I'm drawing these zones, I want to ignore the most recent weekly candle. Reason being is that it hasn't exactly closed just yet, so I don't want to use it as any type of levels. I want to look at previous candlesticks to show me those given levels. So ignoring this candlestick, which we could just cover up from the replay mode, over here, these are all the candles that we see. So if we look all the way to the left, we can see this number highlighted. That is the current price right now. So whenever I'm charting, I like to just focus in on the closest area nearby to get these levels. If price is up here, there's no need for me to draw zones all the way below here, because price is already so far away and I don't expect price to get all the way down there this week. So by saving me time in my charting process, I only focus on areas at current price. So like zooming closer, we can see all these candlesticks have a peak high and a peak low. It doesn't matter if they have wicks above and below, or maybe the body of the candlestick is closer to the top. It doesn't really matter. What I'm focusing on is what is the highest point of a candlestick and what is the lowest point. Same thing here. This is the highest point of the red candlestick and the lowest point is right there. So focusing on that, to draw my zones, I connect these essential highs and lows together. So whenever there are wicks nearby each other, they make a support and resistance zone. So I'm just connecting these areas which are in the most closest proximity, and that is what forms my zone essentially. So right here, if we look all the way to the left, we can see that from this candlestick and then up here all the way to the left, all these wicks are very close to each other. So that makes for a very good tight area of resistance. So you can see from how I drew it, this high was connected, it's covering this area here and here. So all these wicks are the zone essentially. And so when I draw these on the weekly chart, I make sure I go through each, I go all the way down with my mouse, and then from there, then I go to the 1 hour time frame to make sure, does this zone make sense? So we'll go through that in a bit. Now looking a little further down, we can see other areas of support resistance. Right here, the highest part of this green wick and this candle as well, that makes for a very strong resistance or support. So you can see that both of them are very close in proximity. So all I'm doing is connecting these two candlesticks together, and that makes for the zone. Now you can see the next candlestick right here. There is a wick down there, but we don't see another candlestick nearby. The next closest low of a candlestick, or even the high, is pretty far down. It's all the way here. So because it's so far away, I'm not going to connect that whole wick right there all the way to the next part. That makes for a really big zone, and it's not very accurate. I'm looking for much tighter areas like this. So this is an invalid area. Then if we look lower down, let's see if this area could be drawn. So right here, I do see a really nice close zone connecting this candlestick to these two previous candlesticks. Now right here is a little far away. I'm not going to connect that because that makes for a really wide zone. So this is essentially the zone I'm going to have. And then everything else in between, there isn't a strong support resistance. Now it may be a support and resistance line on maybe a smaller time frame, but what I'm looking for when I'm charting is much stronger zones. That way when I'm trading, I know exactly that this is a very strong area where there may be a lot of bulls and bears. And so when I'm taking a trade, whether it is a breakout, a break and retest, I know exactly that there's a lot of buyers or sellers in that area, making it a higher probability when I'm taking that directional move. So even if we just go down a little more to get a little more understanding and example. So down here, we could see this is a good level connecting this candlestick and this. This makes for a nice tight area. Then looking lower down, let's see, moving the mouse down, lower, lower. So this part, this is gonna be my zone right there. And then you can see this wick, this one here, and then right there makes for a nice zone across. Same thing if you look on previous time frames right here. This makes sense here. One candlestick, 2, 3, and then you have another one right there. So that makes for a really nice area. But then again, even if you have, so this is all the way from March 2024. Right now, as I'm speaking, it's now August 20th. So this is already pretty far away. And whenever price is already so far away from where this zone was created, you want to be very careful because those are areas where over time they get weaker and weaker. And as they get weaker, they no longer give you good setups. Like it's not exactly a strong area anymore. So price may just go through them. They may get choppy in that area. Those zones will not be relevant anymore. And to know if these zones are relevant, I like to look at the 1 hour time frame. This is the time frame that I look at. Once I get my weekly zones, I go to this time frame. Essentially, I evaluate these valid zones. So if I see that they are respecting the areas, I'm gonna have these zones kept on my chart. If they don't make sense to be there, then I delete them. So we can kind of go through one by one, starting with the very top. This is the very first support and resistance area. You could see from all the way across, we have a reaction down here. So it bounced higher. Then through this area, it pushed down, it broke, but it did react off this area. And then it reacted again. And you could see from this reaction, it pushed all the way down. Even in most recent movement here, you could see price reacting. So this acts as a very strong level, which I'm going to keep. The next level down, you can see a reaction here, another one here. It may have gone through, but it still reacts essentially in this period of time. So it's still a very relevant area. And then down here, this is a very relevant area at that point in time because price reacted so many times off this level. So this is support now. And then going across, it starts to get messy. You can see that even from zooming in, it doesn't exactly respect it anymore. It's just going through up, down, just chopping through it. Even here, breaks above it, goes down. In this area, it doesn't even really respect it that much. It goes up, but it breaks through, showing a fake out. So in this case, this is when I know that this is no longer a strong level that I want to keep on my chart. So that's when I delete it. The only time I really want to keep the areas is if price is really respecting it. That way we know that it's actually an area to look out for. There's no reason being to draw all these levels if it doesn't even react because it's just really going through. It's not a strong level. Then we have this level down here. You can see price react right there. Here it bounced from this area up and then bounced again. And then down here it broke right through. So it's still a very valid zone. Even if it breaks through, it's okay. What makes it not relevant is when it gets choppy through it. That's gonna show that it's no longer a zone. But even if price breaks through them like this, it could still be an area of reaction. Just like this, how price broke through this area, but still reacts off of it. It's still a valid zone. The only time it's not valid is when it chops through the whole area. That's when I delete the zone. So we can go through another example real quick on maybe an individual stock. This is Apple. So you can see that I already drew these levels, but we can start from scratch. So again, first thing I like to do is look at the overall picture and understand how price is moving. You can see from here, high of all time, then you can see consolidation, a push down. So everything's pushing up and down, pushing down again, and then we have a bullish move. So from here, we could potentially see support and resistance areas just from looking across right here. This is a potential area. Right here could be a potential area because you see price reacting a lot, and then it's kind of up here right now. So that's just something we can visually see. Then we go to the weekly chart and we look at how to draw them. So this, since you know exactly how I draw them, this will be a little faster process. So you have going down further and further, we have a zone right here. I'm going to mark that from this candlestick, this and this. These are all the zones created. Then we go down a little lower, we see this area connecting this candlestick and this candlestick. Then a little lower, we have potentially that area because of these two candlesticks. Then you go some more. This is another area, I would say right here. So that makes sense. This candlestick, this one, and this one. And then if we go down again, this is another candlestick. So these are all the zones I would look at. Then you go to the 1 hour time frame and see if it makes sense to keep that area. Zooming back up, this is an area I would keep because it keeps reacting, and it's essentially at this area and reacting again. It basically hit the area and pushed down. So we're going to keep that. This area across, we see it respecting this area. Then it starts getting choppy through it, but in this area, we still respect it. We have it retesting this area, broke above, retested it, so it's still keeping that area. It's still a valid area to keep. Then we look down here, a reaction, there's some sort of reaction here, and then here it's like the high of the whole consolidation. A little messy here, but then if we look to this area, we still see the zone reacting. So you have a high, it retested, pushed down, broke above, but it keeps retesting this support. So this is still these are all still very valid areas. Then of course the next one is down here, looking from this area, it retested, reacting off this support all the way across. It's starting to look a little messy at this point. Maybe it's going above, it's retesting, but for the future, if price comes down to this area, it may start getting weak and getting choppy. As you can see, it starts getting a little messy. So this is exactly how I do my support and resistance areas. It's a really very straightforward process. It's just the weekly chart, find the levels, find the close proximity candlesticks, connect them, then go to the 1 hour time frame and essentially look at, so if they're valid, you want to keep them. If they're not valid and price is just going through them, then I would delete them. But this is the same process I do for every stock, any ticker, and this you could do on any kind of market, whether forex, crypto, futures. It's all technical analysis, so you could use this on anything.